Have you ever wondered, as you're going through the process of buying a house, how strong your offer really is or how it stacks up to others? Or are you an agent that constantly has clients that always thinks their offer should be accepted just because they're nice people? Well, stick around and we're going to talk about how different offers are better or less attractive, if you will, than others. And let's get into it. So the strongest offer is going to be your cash offer. If you have short contingencies and you're a quick time frame, quick escrow, and that's what the seller wants, cash is going to be king in that capacity. And obviously, if you're meeting the desired price of the seller, no longer is the day that you can just come in low because you're a cash, because the dollar does make a difference when somebody's selling their home. And so with cash, you don't have a loan contingency. You can shorten the close of escrow date because the loan contingency is typically the longest. You also won't have an appraisal contingency because your purchase is not predicated on the value of the home as it's deemed by the appraiser. The only thing you have is an inspection contingency. So that really eliminates a lot of other challenges. That's why cash offers are typically going to be more accepted than a conventional or FHA. Now, that being said, your conventional offer, that is number two. Why is that sometimes more attractive? Because you're putting more money down typically. Now, yes, you can do 3% financing, and conventional typically has a higher credit score. Maybe they have longer job length or time at their job, or more money in the bank to back up a down payment. And there's a lot of different factors that go into a conventional loan. And if you have any more questions about that, feel free to drop them below and I can connect you with our preferred lender. So thirdly is your FHA. Your FHA offer is a little stricter than conventional. They're gonna test things like the stove, does it work? Where a conventional is really looking at the space of the house, to comping it out at what the other comparables have sold for in the area and giving it value or not. Your FHA is going to look for things like smoke detectors, carbon monoxide detectors. Like I said, they look at the stove. They do more of a deep dive because it is backed. It's a government funded loan. So the government wants to make sure that they're lending on a very good piece of property. And typically with FHA loans, you've got less money down or nothing down. I'm seeing more 100% financing loans right now, CalHFA, different things like that, than I did all of last year. And we're only a month into this 2022. So, if somebody doesn't have as much money to put down, then the seller's going to wonder if the buyer's going to be nitpicky when it comes to inspection times. Also, with an FHA offer, you absolutely have to have a loan appraisal or a loan contingency and an appraisal, where sometimes if you're putting more money down and you're going conventional route, you don't have to have an appraisal contingency because you're putting so much down, you know that it's going to appraise for the difference of the loan. And sometimes if you're super qualified, you can even remove the loan contingency up front on a conventional. Cannot do these things on an FHA offer. And so, if you don't have as much money down, then that's going to kind of raise a flag, if you will, to the seller as to how nitpicky we're going to be when the inspection comes back, or if it doesn't appraise, are you going to be able to make up the difference or be able to negotiate that on the back half of things? So those are factors that, if we're scraping in, obviously getting a house offer accepted or purchase offer accepted is still better than renting and throwing that money out the window, especially as the equity is growing year over year and the inflation of the home prices is exponentially growing. You want to be a part of that. So that's one of the reasons that an FHA offer is typically not going to be as attractive as a conventional or cash. And lastly, or not lastly, as it's deemed by the seller, is the VA loan. The VA loan is typically the most restrictive, certainly has the worst reputation for its restrictiveness. However, there are things like an MPMA 33 form that help kind of alleviate some of the red tape. Again, if you're a veteran and want to know more information about that, please drop below and I'll connect you with our preferred lender or send you another video that we've done to talk about that form and how your offer can be just strong. Plus, obviously, if you're a VA, you're doing 100% financing without any PMI, so that'll save you a bunch of cash there as well. So there's your four different types, not of loans, but types of offers. You've got your cash, you've got your conventional, you've got your FHA, and you've got your VA. Are there some other types? Yes, but I'm not going to get into those. So if you have any questions, please feel free, reach out, let me know. If you haven't already, please subscribe. It means a ton to me. And if you want to see what other videos I was talking about as far as the strength of your offer or different things to make your offer stronger that don't cost you anything, feel free to watch some of these other videos, and I will talk to you soon. Have a great day. Bye-bye.